Welcome to Java. Thank you kindly for joining me. It's November 27th, 2024, and it is also Wednesday before the American Thanksgiving holiday. So, to all of my American friends, I wish you a happy Thanksgiving. And for the rest of us, will also be a market holiday as it is closed on Thursday. And then Friday will be only a half day. We'll close early in the markets. There will also be a lot of volatility since it will be extremely low volume trading. And we'll go over that in a bit, but it will be here Friday, but not tomorrow. However, tonight is Discord discussion night. So after the markets close and after Greg's live, so about 5 o'clock p.m. on the hour Eastern Daylight Time, we'll be in that discussion room. We have a lot of good things that we speak about and a lot of really brilliant people. I'm going to leave a current link to it in the description. So if you would like to join us, a couple of people asked a day or two ago, but I just was not able to get that link out because of my connection issues. So I will leave a current link if you would like to join us, either just go through the main chat and we'll tell you how to get there into the conference. So with that, we hope to hear from you this evening. I'll be speaking about some more digital assets as well. So let's go into what's going on with the markets this morning. There is a slight bit of a pullback at the moment, and this is a lot of expectations between the core inflation data that we'll be getting out. But let's start with the market risk indicator, 281.6. So did drop still slightly again. Now, we've got a pullback in the 10-year yield and relative strength of the dollar slightly. Now, as these pull back, if you've been here for a while, you know that gives room to the stock market. So we're actually watching the stock market recover early. Pre-market trading beginning to go green, did dip earlier. And we've got the futures saying there's some trouble ahead. So this kind of follows what we see on what we call holiday trading. So it's going to be a light volume, pardon my typo. It's going to be very volatile because less traders mean larger price swings. So very volatile, and an expectation if it follows historically toward the end of the day, in particular what we call power hour, which is the last hour and a half of the day or so, end of day sell-off by not just retail but also the institutional selling will happen as there are pops throughout the day. So not financial advice. However, would like to say that typically this is what happens with lower volatility just prior to holidays. So we'll get a little bit of bumps prior this morning, looking at it as there might be more buying the dip by retailers early in the morning and then end of the day sell-off and closing outs. Now, we do have Friday coming as well, but for all intent and purpose, today is going to be the largest trading volume and amount going. So basically the end of the week today. So with this, we've got a few things to speak about. Fear greed meter still solidly in greed territory at 65. Now, people are beginning to speak about with the holiday tomorrow, the Santa Claus rally. Now, they talk about this because going into the December trades are typically, historically, also green months for December for these trades. Now, this year doesn't seem to be any different at the moment, with the exception that there are a lot more outliers. So let's keep what we watch is basically the 10-year yield, relative strength of the dollar. As these are beginning to climb at this moment, they look like they're getting a bit of a bump, so already pushing into a bit of weakness. Now we've got gold up again. Silver, surprisingly, not as much as I thought it would be, but above $30 again. And we've got oil could jump on fears again of the Middle East. Now, going along with this, we've got Saudi has just announced that with the drawbacks in oil and the decrease in demand that they are shifting their economic look forwards to a deficit based, which kind of follows the Western world. You don't run an economy any longer, you just borrow, go into debt, and that's how you boost it forward. So very interesting that they're speaking about that now. So going back to the Western central banks, we had the Fed minutes yesterday come out showing that there is a preference for future rate cuts to be gradual. In other words, a slowing down of rate cuts. So as soon as this came out, the stock market took a bit of a hit. It recovered again towards the end of the day. It rallied a bit, but this is something to watch. Now they're slowing down with the rate cuts, meaning there won't be so much easy money. And with this, European Central Bank must stay in lockstep. So over the past couple of days, we saw the imbalance in what that can do to not just the markets, but in general. So the central banks must work in lockstep. Otherwise, the United States USD will rug pull the British pound and the euro. So, in order to keep these stable, Schnabel is saying that there is only limited room for further rate cuts. So, echoing what the Federal Reserve says. So they must stay together with the rate cuts and keep them in tandem. So watch out for this end of day today, looking a bit stronger, although our precious metals and commodities are looking strong toward the end of the day. Now, at the calendar today, we're getting prior to market open some numbers, jobless claims and personal income coming out later. And then, of course, the PCE is what they're looking forward to because that's the more inflationary numbers. We've got pending home sales coming out at 10 a.m. And that'll be interesting to see because that has an effect on the perceived wealth market around us. Now, I've got this chart here to look at futures because I wanted to bring up this fact. Now, this blue line here, as you follow in, is the 10-year Treasury. And with these is the NASDAQ 100 and the mini futures for the S&P 500. Now, what I want to point out here is not so much the exact movements of these, but rather the relationship between the two. Why I always see with the 10-year yield and the relative strength of the dollar follows along with the 10-year in rough terms. But as these are down, stocks are up. And then as you see the 10-year yield rise, you will see this and the relative strength of the dollar, these pressure stocks, and the price goes down. So watching this relationship and seeing it in a chart sometimes helps. So with all of this, what is going on in the background? Well, we've got the current administration is seeking an extra $24 billion, billion with a B, for Ukraine before he walks out the door. Now, it's not enough to take a slap in the face that he's trying to saddle taxpayers with an additional $24 billion before walking out the door, but he is trying to tie this to the government shutdown funds. Now, they're meeting on whether they can spend more in order to keep the United States government running, whether they can afford what they call non-critical positions in the government, and then putting 24 billion on top of it for Ukraine. So this is taxpayer money they're trying to put in with threatening government shutdown. How do you feel about that? Not just that, but we've also got the G7. For those of you that don't know, the meetings that are going on right now between other meeting leaders of the world, they're finalizing $50 billion loan to Ukraine. So on top of this $50 billion and what the United States is putting in for this tranche of funds, we've got an additional $24 billion request. So absolutely ludicrous in my opinion, which I don't often give strongly here, but feel very strongly about that. And hopefully that won't go through. So on the other side of the pond, tax on big British businesses rose 10% even prior to the Labour budget. So similar shenanigans going on over there. This 10% increase taxes. So this is direct tax. So prices rising, inflation will continue. So with this, just have a fun story. This came out. Musk floating the idea buying MSNBC because apparently it's coming up for sale. He's not the only one interested, but he did come out on Twitter. So that would be quite interesting since he has trashed it in a long time, owning mainstream media, but I don't know that that's necessarily a good thing, would still serve a similar purpose. So with this, we've got Vietnam vowing to buy more US aircraft and natural gas in the new tariff era. They don't want to be shut out. Now, Vietnam is a major producer, and so that would kind of be cutting off one's nose. The United States were to increase tariffs on them too much. So they've made some promises, so to speak, for purchasing aircraft in the future, as well as the gas. With this, Europe facing new gas issues because the United States sanctioning Gazprom Bank, they are the largest holders for the pipeline gas that they're getting either directly or paying more for indirectly. And this is just prior to what is expected to be a harsh winter. So this is another kick in the britches to Europe through the gas prices, Olivia Energy, and staying warm. Now, on the other side, in the east, as I've been warning about, they've been very quiet, relatively speaking. We've got Japan's Ishiba renewing pressure on companies to ramp up pay. So if you increase the pay for labor for companies, the companies pass that on through cost of producing the products, which we're watching PCE this morning, which is also inflationary because companies pass that cost on. This is not just free increase in pay. So what happens is we get the pressure to increase the pay, but the increase in the products happens at a more rapid pace. So by doing this, it really ends up that you get less net in the long run. So another story with this, and one way that they can get out is either more production, more resources. They just had a massive discovery of over $26 billion worth on their seafloor. And this is basically minerals, materials, rare earths of the such that they can create with mining off of their area if they can do this. Now, one more word about Europe and the East, because this one crosses both. Volkswagen is talking about closing the factory that they have recently opened over in China because it is going to work against them now. They're getting double tariffs if they produce EVs out of that area. So again, very negative for both sides there. And that's going to show up soon, hasn't yet. So with this, we've got just 10% of consumers planning to spend more this Christmas. I think there's a deeper question here because there's still going to be a large amount of spending. There is what they call Black Friday, which is the day after Thanksgiving, to where there's typically sales in the United States. I think the deeper question is, what will it be spent on? Are they going to use the opportunity to purchase more goods that they need or that they were planning on spending on anyway and just waiting for the sale? Because I suspect, and these numbers don't come out until much later, but I suspect that will be more of the case. So I'd like to go a little bit more into some of the digital assets, because what we've got going on with these are tokenization. So talking about the impact of digital assets on financial stability is minimal. New York Fed, now what are they doing? They're priming this all forward for the tokenization. Now we've already got tokenization in play, but this is for US Treasuries. So this market is really heating up. They've got $2.5 billion of what they call RWAs, real world assets, exceeding $13 billion. What does this do? It's not really understood, I think, in the mainstream, how this affects all of the trading and how it's going to affect the debt moving forward and the risk factors going forward with this. Now, we've got BlackRock, United States Dollar Institutional Digital Liquidity Fund, or BUIDL. This is the short term for it. So if you're interested in this space, this is offered through, it's called Securitize, and the website is rwa.xyz. So rwa.xyz if you're interested. They're the main ones tokenizing real world assets. Tokenized treasury market is rapidly happening, moving over to blockchain technology to digitize the treasuries first. There's quite a bit in there now. This repository, RWA, is tracking all of these real world assets, and it is the largest treasury bond on chain fund. Of course, BlackRock has their grubby little paws in it. So a little bit more in the space of digitization. Justin Sun, he is the one that created Tron coin, investing 30 million into the World Liberty Financial. Now, this Trump-linked crypto platform, as they appointed him, the thing to keep in mind, he's now the main investment holder, largest stakeholder, and it's boosting this space. So just to keep an eye in case you are invested in this one. Now, I'd like to cross over to the main daddy of them all, if you will, is Bitcoin. Now, the main purchaser of Bitcoin is MicroStrategy as a company. And you've got the two stories right in one, that they dropped 30 billion in the largest 4-day drop in Bitcoin. But what they didn't say is how much he's been making over the past 15 days. So on some profit taking, it's in a bottom, already recovering. So we're watching Bitcoin's cryptocurrency rise this morning. We've also got Brazil's Congress weighing about Bitcoin as a reserve and a hedge against global risks. So with this, cryptocurrencies already recovering, could head back. They're at a support level and going to try that 100,000 level again, in my opinion, not financial advice. So with this, a quick reminder, Discord later this afternoon. Look forward to speaking with you all. And if I don't, I wish you all a wonderful holiday. And until I see you again, my friends, stay free.